My Forex Funds, prop firms, fraud, and regulation. So if you trade prop firms, you might want to pay attention to this. If you traded with My Forex Funds, you might be interested. If you're trading with other prop firms. So let's get into it. You probably know it's big news. My Forex Funds was frozen last week. My Forex Funds was one of, if not the biggest, up there with FTMO, prop firm in the space. I heard they controlled 40% market share. We know that over the past couple years, they did over $300 million in collected challenge fees, paid out between $100 and $200 million in profit splits. And they were frozen for fraud, not really for regulation. So there's two issues here, fraud and regulation. There's My Forex Funds, what's going to happen, and there's what's going to happen with prop firms, fraud and regulation. So I watched Kimmel's video where he put up the case against them, the CFTC, freezing them, suing them, whatever. It's a 45-page document, and there's a lot that's in there. And it's not just a regulatory gray area. What My Forex Funds did, and by the way, here's, in my opinion, the most likely result. They're dead, they're gone. If you had money there, there's a good chance you'll get it eventually after years of legal issues. And my personal stake, I tried a lot of prop firms, and I actually just started with My Forex Funds. I invested about $3,000 for 600K accounts a week before this happened. So I got a chance to trade with them and compare them to other prop firms, and what I'm gonna tell you is gonna be interesting. Yeah, those accounts are gone, and I think eventually there's a good chance, because it seems like they're extremely profitable. You're gonna get, and the accounts were frozen, bank accounts were frozen. If you have money with them, like I expect I'll probably get a refund, but I have to write that money off as gone for the next 2 years and not care about it. And for me, losing $3,000, that's like a Sunday afternoon in trading. So whatever, I really don't feel stressed about it at all. Okay, so now that's out of the way. So what's really interesting is the case against them is that basically they're lying and conspiring against their own traders and their own brokers, and they have special software to make people fail and lose and violate their accounts and crank up slippage and all this. And that's all in there. So first, a little bit high level about prop firms. In theory, the prop firm has two revenue streams. It has a revenue stream on the challenge, and it has a revenue stream of the profitable traders who they copy trade, pass their trades through the market. They make money on both sides. In theory. So whether it's a prop firm or a broker, whatever it is, if a broker has two options for how to handle your trades. They can A-book you, which is where they pass you through a real trade. And in the case of the prop firm, if they're A-booking you, they pass you through a real trade. If you make money, they make money. If you lose money, you lose money. If they are B-booking you, if the prop firm's B-booking you through their broker, it means that it's just totally simulated trade. Nothing ever happens. If you request a payout, they lose money. So if you make money, they lose money. If you lose money, nothing happens. They don't necessarily make money when you lose money, but they made money off your challenge fee previously. So in theory, on the front end, a prop firm makes money off of challenge fees, and on the back end runs a hedge fund where they A-book some traders and they B-book some traders, and they make some amount of money off of A-booking the best traders. That is a theory of prop firms, and in practice, we only want to trade with prop firms who have the dual income business model. However, we can't know which ones are, and there's some tells and there's some tips. But My Forex Funds apparently was a one income model prop firm. They only made money from the challenges. They B-booked everyone. So what that means is, when they told you that some of these trades, none of the trades went through, it was all a lie. And also what it means is they never make money off of live accounts. They only lose money off live accounts. So they're trying to get you to fail challenges, and they're trying to get you to fail live accounts. Now, this is in the document. They obtained transcripts of chats between employees saying, this person's making too much money, we're going to cancel their account on a violation. quote, slip them to hell. And what's interesting and important in my Forex Funds case is they were their own broker. They have their own broker. Since they're their own broker, it's easy for them to go in and do anything that they want with their own software, right? So apparently what they were doing is if someone's up, say, 5%, then they will basically just crank up a slippage dial and you slip way more on everything. And if you make a lot of money, they're looking for reasons to violate and make you fail. So it's because, and also it was in their beliefs that traders couldn't be profitable. They could be lucky, but they can only lose money, which doesn't make, it's not helpful. It's just such a cynical belief for someone who runs a prop firm. Like, clearly some people make money consistently. Most people don't, but clearly some do. Why would you not want to A-book those and copy their trades? But they didn't believe in it, really. It sounded like they may have A-booked like a few people, like out of 100,000 funded traders, like they might have A-booked over the years 100 of them. So, but it was basically zero. Now, I personally used my Forex Funds, and it doesn't surprise me at all because I only used it for a week. The first thing I noticed was the spreads were incredibly high. They were twice as high as FTMOs. Why are the spreads so high? The second thing I noticed was in the dashboard, it didn't tell you what your maximum drawdown was where the account failed. How can it not tell you that? The only way to find out is to go to support and ask them. Every other prop firm does that. And then another thing I noticed, I trade crypto. Most of the prop firms allow crypto trading 24/7. Occasionally, one of them might have like a 5-minute pause at this time every day. But my Forex Funds, not only is there no weekend trading on crypto, but in the middle of the day during heavy volatility, their servers shut off for 55 minutes. Why? Okay, well, it's because they want you to fail. So these were all tells that if they really, there's no reason they need to have those adverse conditions. If they want you to pass, they're going to show you your drawdown limit. If they want you to pass, they're not going to put unnecessary commissions on you. And not just pass, but be successful as a funded trader. If they want to make money off copying your trades, they aren't going to close the market on you for 55 minutes arbitrarily on a market that trades 24/7, 365. So all that is not surprising. So my Forex Funds, vile, evil. What about other prop firms? Well, we don't know, but I would guess that there are some prop firms that A-book, B-book. There's some prop firms that only B-book. I doubt there's any prop firms that only A-book, because from what it sounds like, even the winning traders on average still blow up. But we want to trade with firms that A-book some of us, because that means that they're going to give us better conditions. Now, we can't necessarily know from the back end, but like if there's just too many weird violations of rules, like not to be trusted. So like extremely high commissions, unusually high spreads, weird rules like consistency rule, trailing drawdown rule, no weekend trading or weird pauses for assets that trade 24/7, weird lot size limits. What else? Adverse changes in conditions. What else? I mean, they're signaling themselves as saying they don't want you to pass. We B-book only because here's all this absolute horrendous bullshit we're putting on you that's going to make it super hard for you to pass, right? So what are some other crazy rules that I've seen on there? Consistency rule is crazy. Yeah, you know what? So, and what we want to see is reasonable and realistic swaps, commissions, and slippage. Yeah, swaps is another thing. Like the way swaps work, especially when trading Bitcoin, is sometimes it's positive on one side, sometimes it's negative on the other side. If they're charging you negative swaps on both sides, that's another sign that it's a little bit fishy. But if they're giving you reasonable trading conditions, then it's a good sign. It's also a good sign if their phase one, phase two is a little bit more challenging because it means that they do want to they're going to make it difficult on you in a transparent way. I'm talking about 10% profit target. They're saying it's going to be hard because there's a 10% profit target. It's not going to be hard because we're going to sneak some insane commissions on you or whatever it is, right? So um, that is to look out for. Now, another thing to specifically look out for is prop firms that use a third party broker. That's super important. My Forex funds can crank up the slippage and do all this shit because they are their own broker, right? So there's certain prop firms that are their own broker, cannot be trusted, and this isn't for regulatory reasons. It's for power reasons that they can conspire against you, and it suggests it's just not to be trusted. So the if a prop firm's broker is 8cap, Think Markets, Osprey FX, or whatever it is, it makes it a lot easier to trust them because they can't go in there and just crank up the slippage on this or I mean it's possible that they can, and it's still possible that maybe they're colluding against you through 8cap or through Think Markets or whatever. It's much harder though. If they have an external broker, it's much more likely that they at the very least aren't conspiring to defraud you of your money. Now, um, I'll just briefly mention the funded trader specifically. I watched these interviews. I like them. Angelo, is this a trustworthy guy? Well, a couple things. One, he seems genuinely happy for his high-paying guest. If someone makes a lot of money on their firm, he flies them out. He interviews them. He seems genuinely happy for them, which is a really good sign. And he also, I've seen discussion of it where he's saying, well, at first we wanted to A-book everyone. That didn't work. Now we're B-booking people, but we have certain team running a hedge fund, essentially trying to be a hedge fund to figure out who to A-book, who to B-book. That's actually the goal, is we think there's more money to make on the back end than the front end. Whether that's true or not, it might be true. It kind of makes sense though, but in theory, they're A-booking some, they're B-booking some. I I think it makes sense for some prop firms to be doing A-book, B-booking. I want to do business with them. I don't know which ones there are necessarily, but the ones that definitely aren't are super obvious about it and to be avoided. Um, and yeah, one example would be E8 funding. They have insanely a combination of high fees, yeah, high commissions, high swaps, and high spreads. You don't need all that. It's too much. Another one is True Forex Funds, which I made a lot of money with True Forex Funds. I'm not going to trade with them anymore. They put insane commissions on Bitcoin out of nowhere. They have super high, unnecessarily high swaps, and they own their own broker. That's the main thing. True proprietary funds. I don't trust them because they have their own broker. So I'm moving on to some other firms. Um, I like TFT. I think FTMO is probably okay. What are the other ones? I'm not going to trade my funded FX anymore. Skilled funded trader is new. You know, I trust them more just because Paladin or whatever traders believe you can be profitable trading. So they don't have this cynical belief that all traders lose. So they're looking to A-book people. So that business might fail because it's new. I'm looking at some other ones, top tier trading, bespoke funding. I don't really know. I'm not really necessarily recommending, but again, anything that has weird adverse conditions, do not trust. And once you fail your account, whatever, move on to the next firm. Okay, so let's talk about regulation. So it's mostly a fraud issue. There is maybe some regulation issue here as well. And I imagine there's regulation coming to the prop firm space. And I'll start with my a possible prediction. Like I told you with my Forex funds, they're not coming back. Your money's gone. For now, you might get a refund later. There's a possibility if you're a US based trader that eventually we're not going to be able to trade prop firms, or we're going to be able to trade them with less leverage and fewer assets. So that might happen. So for example, what I'm seeing in Bitcoin perpetual futures, it's not illegal for an American to trade, but it's essentially against regulations for any broker or exchange to offer that to a U.S. citizen. So they keep going KYC, know your customer. If you're a U.S. citizen, you can't do it. You got to move around. Well, I went to prop firms because prop firms let me trade leveraged Bitcoin and Ethereum without having to pretend I'm in some VPN. Via VPN, I'm somewhere that I'm not, or having to keep move around. Now, I don't know. Let me just speculate. So this is the part where I know absolutely the least. But I know that, and this is from listening to TFT Angelo as well, there's a lot of regulatory gray area over this. So I'm concerned that now it's definitely legal for them to A-book your Forex trades and your index trades. Maybe not on as much leverage because there's regulations there. They might be going around. I'm not certain that it's legal for them to A-book you on crypto, Bitcoin and ETH, because it's not necessarily regulatorily allowed to offer U.S. citizens to trade leveraged crypto products, and prop firms are doing that. So that is something that might get shut down, and for me, I would get a digital ID, or worst case, then I'm going to start trading Forex or indices. Yeah, I don't know that much about regulation, so I'm not going to speak on it. I'd just say be prepared for the possibility that you won't be able to do things in the same way as a consumer of these products. And then the last thing is sort of my general perception of this, and I think it's really good news, because the scammers are getting revealed and getting destroyed. And anybody who's watching right now, anybody who runs a prop firm, if you're using their model where you're booking everyone and you try to fail people, you're now afraid you're going to go to jail. You're afraid your business is going to be shut down. You're afraid your bank accounts are going to be frozen. What are you going to do? Well, you don't want to start on my Forex funds. Those people are going to maybe try to become legit. And the legit ones might be able to show that they're legit, and they'll at least survive. So what we're going to get is we're going to get better trading conditions. This should result in better trading conditions for the trader, because it's going to wash out and eliminate the firms that are booking everyone and trying to fail you, because they're saying, no, that's actually criminal. It's not just against regulation, but we're actually freezing you. There's actually criminal fraud. So freezing your bank accounts. So I think it's good news. I think we'll see trading conditions actually improve. So I'm stoked about that. Okay, appreciate you guys. Much love, and look forward to talking to you soon. Peace. Let me know what you think in the comments.